The V-shaped recovery of last financial year is now becoming a W, but this second dip should be much shallower than last year's recession. Our thoughts for the outlook through spring and beyond. With 60% of Australia's population still in lockdown, a two-speed economy will clearly be visible in the third quarter economic data, prior to vaccination rates allowing the reopening of New South Wales, ACT and Victoria. As a result, third quarter GDP will probably contract up to 4%, which is about 60% of last year's economic contraction in the COVID recession. And unemployment will also briefly rise over the next few months, probably up to around 5.5%. We saw in the latest GDP numbers that Australia's economy grew 9.6% last financial year, the largest annual rise on record. But we will need a repeat of this resilience to bounce back from the current lockdowns. The timing of the recovery is, of course, dependent on vaccination rates. But with increased supply, we are on target to reach 70% by late October and hopefully 80% by late November. This should allow much greater mobility and consumer spending leading up to Christmas, albeit with some complications around state borders and perhaps with greater use of vaccine passports and rapid antigen testing. Businesses continue to be heavily reliant on government support measures. Fiscal support has been critical over the last 18 months. But the RBA are focusing on the recovery through the year end and into 2022. So are pressing on with the tapering of their QE bond purchase program while keeping official interest rates at record lows. Arguably, fiscal policy has been the key driver of supporting businesses and the jobs market, whereas monetary policy has mainly been supportive of the housing market, with national dwelling values now up close to 20% year on year. But larger rises than these are being seen all around the world. Once RBA interest rates start to rise, probably around mid-2023, this market will need to adjust. But for now, all asset classes are being driven by ultra-low central bank rates and increased money supply, with equity markets also extending their gains. So, as we get closer to an 80% adult vaccination rate, despite how challenging this period has been for households and businesses, it's worth taking stock on the positives for our economy. Australia is one of the few economies in the world to have higher employment and GDP than pre-pandemic. We're still running a record trade surplus, increasing to just over $12 billion for July. And government spending, funded by debt rather than taxes, has helped us through the first wave of the pandemic. But of course, this V-shaped recovery will resemble a W, or perhaps a capital V followed by a lowercase v, as we deal with the Delta variant. How quickly consumer demand returns and activity such as tourism builds as we reopen state borders will be critical. But the fact that vaccination rates are accelerating here and the effectiveness of vaccines continues to be seen around the world adds to the promise of a much brighter 2022 than the last few months has been. The recovery will, like the last 12 months, be uneven and full of twists and turns. But our economy is better placed than most to move from pandemic to endemic. And that's the market update from Bendigo Bank.